Novick. I am the National Director for Associations in the Nonprofit Practice at Arthur J. Gallagher Company in Chicago. And my firm, for many years, had dealt exclusively with associations, nonprofit organizations. So again, I'm pretty involved in the nonprofit space and have been involved with event cancellation insurance for many years. But before I start this morning, I just want to share a couple of thoughts on behalf of myself, my company. Look, this is a challenging time for all of us. And like many of you, my firm's a vendor. We're a vendor to the meeting and hospitality industry. But your being a vendor and our being a vendor are different. Your role is so different than ours. You may not be frontline medical or postal workers or grocery employees. And I take my hat off to all of them and I thank them so much for what they're doing. But still, this virus touches the people on this call heavily, I know. And the best I can do is help you understand what you're facing, even if, you know, that's difficult information for you to get. But if I can help you do that, if I can help you manage your expectations, hopefully you can now go out and do what you need to do, which is start planning the next generation of meetings. And I wish you all the best. So let's talk about event cancellation insurance. I'm going to talk in three broad areas, and I'm going to talk fast because you've sent in some really great questions, and I want to get into as many as I can. The three broad areas I want to get to are claims, all having to do with event cancellation insurance, claims, the coverage itself for a few minutes, and then the ECI market, the event cancellation insurance marketplace, just so you know who you're working with on the other side, and then a little bit of what your expectations can be going forward, both in terms of coverage and in terms of costs. So let's start with claims. Claims is a process. It's not, you know, I've said to my staff before, claims it's not a spectator sport. Our clients need to be engaged and involved in the process if they're going to advocate for their organizations. And that's as true here as it is in any type of insurance coverage you may be involved with. It's your responsibility under this policy to not only prove that there's a loss, but to prove the amount of the loss. And so you need to be prepared to participate as fully as is necessary if you're going to maximize the outcome of a claim. So the claim process actually begins with something I've left off this list, and that's providing notice to the carrier. Notice is just notice is a formal requirement of a contract, of the insurance contract, and it's to provide the carrier with knowledge of circumstances that might result in a claim under your policy or an actual claim if you've reached that stage. A lot of organizations really get bogged down at this stage. First of all, there's some question about, well, when do I put the carrier on notice? And the answer is now. If you have knowledge of circumstances that could result in a claim, there is no value to your organization in deferring that notification of the carrier. The notice that you're going to provide, remember, it's notice, it's not a thesis. It does not need to be the entire recitation of events. All it needs to do is to provide basic information to put the carrier on notice and to begin the process of adjusting a claim if the carrier acknowledges that they owe a duty to the claim. And so that's the first step of the three-step process. Acknowledgement by the carrier that coverage has been triggered. So your meeting's the end of July. You're going to be in McCormick Place, or you're going to be in Javits Center, you're going to be in Morial. You got 1,000 exhibitors, 20,000 attendees coming. by the way, your convention center is a hospital right now. And so you think, you're convinced, you've got a claim. Not so fast. A claim, oh, I advanced that slide before I was done with it. A claim under the policy presumes a cancellation. It could be something other than that, but we'll just talk about cancellation for the moment. And cancellation means the inability of the named insured to open or commence the event or otherwise maintain the event in whole or in part. Now, all the italics that you see in this slide are taken, if it's italicized, I took it from a policy, but I took it from a lot of different policies, so I'm not speaking to any one here. You should think of this in just sort of generic terms. The focus here needs to be on the inability of the named insured, your organization or your client, the inability to open or commence, not the inconvenience or not the disinclination or not the fear, but it's the physical or legal inability to go forward with the event that's necessary in order to get the carrier to acknowledge that they owe a duty under the policy. All the rights that the insured has are going to be premised upon whether the carrier acknowledges that the circumstances result in a cancellation or curtailment or postponement, whatever the case may be. So the second step of the process is to understand what your contractual obligations are. You should at all times do all things necessary to avoid or diminish the loss, including but not limited to using your best efforts to reschedule. There's a lot of questions about mitigation. Does the insured actually have to do all the things that are necessary to avoid or diminish the loss? No, you don't. You need to do all the things that are necessary in order to mitigate the loss or damage that results from your claim. And mitigation techniques include curtailing the event, rescheduling the event, perhaps hosting a virtual meeting. It can also include efforts to limit expense by making sure that you exercise all your force majeure clauses, taking advantage of any other release provisions in contracts. You know, we have a principal speaker, we paid $10,000 down, we're going to pay another $10,000 60 days out, and another $25,000 after the speech. If we take advantage of canceling that now, we'll avoid that second payment. That's a great mitigation example. But it must be clear that when you're faced with the question from the carrier, have you done all the things that are necessary to avoid or diminish the loss? Some of them you may find to be commercially impracticable. You won't be able to do it. I can't host this meeting because I can't host this as a virtual meeting because the face-to-face communication is so essential to the content, so much an expectation of my attendees that a virtual meeting cannot be a suitable proxy for it. Okay, if you can't host it as a substitute for the meeting, can you use it in any more limited way? So the carrier is going to press insureds to make that effort, to explore those options. Now, preparing for the loss. Again, I left out the notice requirement. That's key, of course. Prepare for the adjustment phase of the claim. To the question, when do I need to start preparing for a claim? The answer can only be one thing. You need to start preparing for your claim when you fill out the application. You need to provide enough information to complete the application so that you can indicate what your budgeted gross meeting revenue and budget gross expense and net are going to be. It's important that you understand that that document, that budget that you use to complete the application that will become a part of the claim process. You'll be asked to provide that budget, and then current budgets, and then projected budgets. But if something isn't included, if an expense isn't included in the original budget that aligned with the application, you're not going to have a claim for that particular expense item. If you can't demonstrate that that was part of the calculus that led to the numbers that the carrier used as the basis for issuing coverage, you won't have an opportunity after the fact to enter those for the claim. So let me take a couple of minutes and tell you what the process of the claim is going to be and what you need to do to prepare for that. Having put the insurance company on notice, you're going to need to begin to prepare documents, the things that the carrier will need to adjust the claim. And it's a pretty complicated claims adjustment. You're going to need to have the budgets that I spoke about. You're going to need to have available to the carrier all the venue, all the hotel, all the service provider contracts under which expenses have already been incurred or may be incurred. So if you're going to make a claim and you're going to say, well, I made a deposit to a caterer or transportation company or whoever, and you're seeking now recovery for that because your meeting's been canceled, the carrier's going to want to see that contract, and they're going to want to make certain that you have leveraged any cancellation provisions or force majeure provisions that they may contain. If the contract, and I'm sure there's many contracts, some of which will not have what I would refer to as money on them. There's no expense that's been paid yet, when there's no expense that's due at a certain time that we can then avoid if we act now. Those don't need to go into this submission, this claims package. But again, the ones that do, you're going to need to provide copies of those contracts. And I suggest you just put them in a zip folder or put them in a Dropbox and add to them. And that way the carrier and whoever the carrier wants to see it can see them. You're also going to have to send specimen attendee agreements, registration and exhibitor agreements. We're going to be making full refunds because the meeting's been canceled. The carrier at least wants to see what your refund policy was stated as in those agreements. Now, let me just step away from the claim specific question for a moment and say, with regard to your attendees and your exhibitors, and where you have a circumstance where you've got a complete cancellation of your meeting, everyone is expecting a refund. Even if your agreements, your refund cancellation policies do not call for a refund, in fact, may permit your organization not to send a refund, most of the event cancellation insurance policies, in fact, I would say all of them now, permit you to refund those monies, whether you're obligated to under contract or not. So even if the agreement says we're entitled to keep the exhibitor fee or some portion of the exhibitor fee for any cancellation whatsoever, the insurance policy will allow you to make a voluntary payment and have that payment be covered under the policy. The last thing you'll need to do, and this won't be necessary, well, it'll be necessary depending upon the type of meeting you have, but is to provide a list of the attendees and exhibitors seeking a refund. Now that's always going to be a requirement if you've got a partial cancellation or a reduction of curtailment in the event where 20% of my attendees and 15% of my exhibitors can't make it. Here's why we're requesting a refund for those attendees. If it's a total cancellation, the carrier's not going to need to see a list of all your attendees and exhibitors. They will ask for financial documents that support that you have made those payments. And they can be a number of things. It could be something as simple as an Excel sheet, or the carrier may want to selectively review your bank account statements to see that all those funds have been paid out. So let me talk a little bit now, before we move on to the marketplace, about coverage. And what should you expect out of an event cancellation insurance policy? The policy is remarkable in a number of ways. What we have here really is a property insurance policy. And the property is your meeting. Think of it as a coin-operated laundry machine. And if that laundry machine breaks, nobody's putting quarters into it anymore. And there's a loss of revenue. Well, I see your meeting in that same way. It's a piece of property, and it generates revenue. And if it breaks, there's a loss of revenue, and there may be extra expenses. What the event cancellation insurance policy is intended to do is to make the insured whole, as though there was no claim. Well, that's the objective of every insurance policy, to make the insured whole as if there was no claim. What you're looking to do ultimately is to protect the net asset, the revenue minus expense, the net asset, the net revenue that the organization wants to carry forward. That's the objective. In the course of doing that, we ensure the full budgeted gross revenue, so that at any point in time when there's a cancellation or curtailment, if we've paid expenses, those expenses will be covered. They won't reduce our loss, and they won't add to our loss. There's only a couple of things that can happen under an event cancellation insurance policy. The event can be canceled, it can be curtailed, it can be postponed. That's about it. And so the threshold for making the determination that inability to host the meeting is going to be applied to whatever circumstance might follow your scheduled insured event. But it must be clear that in order for you to have coverage under any eventuality, cancellation, postponement, curtailment, whatever it might be, you're going to have to meet that threshold of, is it a covered claim? And here's where the question comes in with regard to coronavirus. Many policies have an exclusion for coronavirus. Some are silent, and the insured, your organizations, have an option when coverage is purchased, whether to extend the basic, what are known as the basic perils, to include coronavirus. Coronavirus, if it's covered, must be the proximate cause of your claim, solely and exclusively the cause of your claim. Anything like people didn't want to come because they were fearful of getting it is the result of coronavirus, but it's not the direct result of coronavirus. And that's where there's been a lot of confusion. Your event that's being held in Javits Center needs to be canceled. It's canceled if there's an inability for you to use that venue. The cause of that cancellation must be directly related. If the Javits Center is being used as a hospital and you can't get in, you've got a claim. If the Javits Center is no longer a hospital, but they haven't scrubbed down, they haven't put the services back up, can't assure you that it's hazard-free for the purpose of bringing together thousands of people, you've got a claim. But if you can't go to your July meeting, or you think you should be canceling your July meeting now, the carrier's going to push back and say, you can't meet the threshold of inability at this time in May for a meeting that's nearly 3 months away. And what you may end up having to do is wait until they make that judgment. In many cases, you may end up having to wait until after you need to take action to mitigate your loss and theirs. And you can try to compel the insurance company to give you an answer, give you a favorable answer, and they won't, because they're not going to be making these decisions 60 and 90 and 120 days out. They feel like they need to get closer to the loss event itself before they're willing to give you that acknowledgement. So in order to finish with this process of completing the claim submission package, what you're going to want to do is review this with your accountant. In fact, you may want to engage an outside vendor. Gallagher, the firm that I work for, in our claim support unit, we are providing a forensic accountant to review clients' submissions, claim submissions. Let me move on. Let's talk about the ECI market now. The insurance market, when you hear the term the insurance market, it refers globally to the carriers and other entities that provide insurance coverage. That's the market. The market for event cancellation insurance are carriers and syndicates at Lloyd's of London that would insure event cancellation insurance. A market can also, when you hear someone like me or John talk about a market, it could also refer to a particular carrier or a particular syndicate, as in ABC Insurance Company is a market for event cancellation insurance. So let's talk a little bit now about the marketplace, what coverages you should be expecting, what coverages you may no longer be able to look forward to, and what your expectations of cost should be going forward. The marketplace for event cancellation insurance is made up principally of syndicates at Lloyd's of London. And a syndicate is a organization, it's a group of individuals or companies that come together to participate in the risk-taking process of issuing an insurance policy. They are not an insurance company, but they are governed by the rules at Lloyd's that require that they have sufficient financial strength to participate in that syndicate. Most of the market, I would say right now, probably about 60 to 70% of the market is London syndicates. There's also specialty carriers like Tokyo Marine, Liberty Mutual. The marketplace has gotten really challenged. You have a number of carriers providing coverage that have already indicated that they're going to drop different elements of the policy. The biggest one so far is communicable disease. Communicable disease is the most significant, most recognizable peril that is no longer available. If you bought your coverage, or if you tried to obtain coverage after mid-January, mid to late January, you weren't going to get communicable disease. Well, you wouldn't have gotten coronavirus. You might not have gotten communicable disease either. By early February, I don't recall exactly when, carriers are just putting a total exclusion on communicable disease coverage. And I expect that will remain that way. In other words, unavailable at least until the first quarter of next year. It's not just that carriers, the marketplace has taken a bath on this coronavirus claim. I mean, that's only part of the reason why it's not being offered. The real reason, the real obstacle to insurance companies not offering it is they don't know how to price it yet. That that obviously they weren't pricing for it properly before, and the evidence for that is what we're going through. But with the benefit of hindsight, you look back and you say, well, if you had a real pandemic, a global thing, it would be a lot of money. Shouldn't we charge more for this? The answer, of course, would have been yes, but nobody thought about it that way. So that's the most significant thing that you should be mindful of. Don't wait for the communicable disease offer to buy coverage. There were lots of reasons to have event cancellation insurance before this year, and they're still just as valid. But there are going to be some other things that are challenging, depending upon which carrier you're dealing with. The loss of a coverage known as enforced reduced attendance by some markets, not all, but by some, is pretty significant, because in most cases, the claims that you would put forward aren't going to be a total cancellation. Historically, most claims under this policy are for a curtailment or reduced attendance. And where your attendee, whether it's an exhibitor or registrant, can't come for a cause beyond their control and one that's not otherwise excluded under the policy, you can put in a claim for that. And that's known as enforced reduced attendance. Some markets already, and I'm sure some going forward, will no longer offer that, or at least for some period of time. And then there's a lot of other features to the policy that might not be as elevated, as significant as that, unless, of course, your claim touches on one of these things. But for example, many policies, I'm sure you're familiar with, have a component that will cover the cost of smaller meetings, less than $150,000 or $125,000, if they take place during the policy period. In other words, the time coverage between when coverage was bound and when your event ends. If you had a small event during that time frame, you could expect that it would be covered in most cases at no additional charge, and in some cases, depending upon the carrier, you didn't even have to report it. It was automatic. Those kind of features, those enhancements, I think, are going to be gone for a while. You'll be asked to choose among more options that are offered a la carte, but at least through year end, the scope of coverage is going to be less comprehensive than it has been, with communicable disease being the conspicuously absent. But again, I wouldn't delay a decision just to wait for communicable disease. So the last thing I want to do in terms of perspective view of the market, because I do want to get to your questions. Look, your insurance companies, if you're dealing with a claim, are going to push back. They're going to fight hardball. And, do insurance companies not pay claims? Yeah, some of them don't. Some insurance companies have stiffed insureds along the way. All of them have at some point in time, I'm sure. Insurance companies pay claims. They're in the business to pay claims. They're going to stay within the lines. They're going to pay the claim as narrowly as the contract provides. But no carrier is walking away. Just because a carrier that you may be working with is playing hardball and being aggressive doesn't mean that you can't do the same. I'm sure operators are standing by at John's office right now if you need a lawyer, and many of you will. We're involved with an enormous number of client claims, some of which aren't going to be adjusted to the insured satisfaction. And I won't say whether I'm supporting it or opposed to it. All I will tell to the client is what my view of their coverage expectation should be. But in some cases, it's necessary. And if you need to go that far, it shouldn't come as a surprise. I mentioned to John that a colleague of mine who works in London now told me that the event cancellation insurance market as a result of this claim, will give back the profit that it has made for the last 2 decades. So there's a remarkable amount of anxiety on the carrier side. Sharing that with you today, it just helps you understand what who the person across the table from you is facing, what they're facing. It should come as no surprise, rates have gone up. remarkably, just remarkably. I started in this business back in 1981, and one of the event cancellation products on the marketplace now was my product back then. It was brand new. I was working for another company, and at that time rates were higher than they are now, or than they were at January 1, 2020. The price of event cancellation had dropped so much. There were days where I thought it can't go lower, and then it did. Now, that all changed. That changed in a heartbeat. Rates that you might have been paying anywhere from 0.025 times gross revenue are now going to be anywhere from 0.6 to a full 1% or higher. That's a remarkable increase, just a remarkable increase. And it's going to cause you to consider whether the cost benefit of this still exists for you or not. I would tell you that, going back to the point that I made earlier about your meeting being a piece of property, in many cases, the revenue generated from these meetings, in some cases, let me say, the revenue generated from these meetings is the single biggest piece of property owned by the insured. Nothing more on the balance sheet comes close. One of the things that, well, I'll tell you what, I'm going to answer that question when I get to your questions here. So let me begin. Mary Ann, how much time do we have left? 6 minutes?
I'd say, Lou, I don't know what we can do here, but yeah, we got about 6 minutes to go to 50. I would say
we can go longer, John.
Yeah, I was just going to say we can probably squeeze a few more minutes out of this to get down to the questions. I think, Lou, one of the key elements we're seeing overall relative to this marketplace is just as you said, the basic overall insecurity of everybody as to what is going to be recoverable, how they're going to do it, and working very closely and putting together your documentation is so key. Being able to make a solid claim and putting it forward and having it reviewed by maybe your attorney or your broker before you submit it to make sure you've covered everything so you don't leave any money on the table.
Hey, so I'm going to get to a couple of questions, and because I feel badly about having to, cut it short in the middle, I'm going to take the ones that I don't get to, and I'm going to put some answers to them over the next few days, and I will get them back to Mary Ann, and then they'll be available to you. And if you have others, go ahead and send them in. She'll forward them to me, and I'll try to get those back to you by midweek. But before we break, I just want to and say sincerely, it's not a small thing what many of you need to do when this call is over. I understand that. And, some of you are going to be in a position where you need to literally go back and pick up the pieces. But once that's done, you're going to have to start redesigning the meeting industry. I've been to many of them. I'm going to go to many more. I don't know what the new ones are going to look like, but I do want to pass along to you a thought that one of my colleagues, Andrew Moss, shared with me. He said that more than ever, before people went to meetings routinely. Now, the next time they go to your meeting, they're going to really, really want to be there. They want to be at your next meeting. They want to network. They want to get CE. They want to make a community again. And again, we're not medical personnel on this call. We're not going to cure this disease. But I would say to you sincerely that you guys do have a big role in bringing that part of the economy back and adding that back to people who miss it now, desperately looking for it. And I wish you all the best in doing that. So now I have even less time to answer questions, but I will do a few because some of them I think have a pretty widespread interest here. I don't get event cancellation, but I do suggest my clients get it. As an independent planner, is there insurance that I can get if my client cancels the event? And the answer to that question is, if your client includes your fee in their expense budget, then the obligation under that contract would be covered under the policy. Now, it'll be subject to all the, same criteria that every other contract is subject to. If there's a cancellation provision, when is it? If there's a mitigation of expense provision, when is that? And you'll be in the somewhat awkward position of canceling your own contract. But sure, that money can be covered by insurance. You just want to get the approval of your insured before you enter that into the budget.
And boy, Lou, if I may, that really that's a great segue. As I mentioned, the program coming up on May 12th. That's one of the topics that will be discussed, is that client contract and how you protect yourself in the event the client cancels, or for some reason there's an intervening event that makes it necessary to cancel, such as what we're dealing with here.
A couple other questions that really caught my attention. So we recently applied for ECI, Carrier's Approach, Wouldn't Write Communicable Disease. There were several terrorism options, but no options for CD. As I said, you're not going to see communicable disease come back, in my judgment, until after the first of the year. And when it comes back, it will be incredibly expensive. Right now, I couldn't even give you a projection of cost. But again, don't delay the event cancellation insurance decision because you can't get communicable disease. If your client needed it, they still need it. There's no question about it. What's the formula for calculating it? So the way it's done by the time it gets to you is oftentimes you'll see, depending upon who your broker is or what carrier you're dealing with, you'll see a single quote, and it'll be the fully loaded expense. And what you won't see are the various options. That's probably more of a historical presentation. Now what you'll find is that the various elements of coverage are priced out for you, and the rate that is associated with those, it may or may not be included there, but really what happens is the carrier says for the base perils, things like the building burns and national mourning or whatever, we're going to charge a certain factor, and that's the rate for base perils. And then you add earthquake if you're in California. If you're not in California, earthquake's free. Then you'll add terrorism at whatever level you want to add terrorism. And each of these elements of coverage have a rate associated with them. You pick whatever elements of coverage you want, the options, you add up the rate, you multiply it times budgeted gross revenue, and that's getting you pretty close to your premium expense. There's a few other things that go in, but they're not going to really impact it that much. So that's how you can estimate it. Right now, as I said a few minutes ago, if you're budgeting for an event that isn't heavily influenced by wind, like Gulf Mexico in hurricane season, you should be planning, and not earthquake in California, you should be planning for a rate of about 0.008 times gross revenue. So that's a reasonable estimate for the next several months at least. Add in wind, add in earthquake, you could be well over 1.1%. One or two other questions. What types of events would be best served by event cancellation insurance? There's a number of criteria you can apply. If there's a big net revenue position, the organization, if they need that money to survive next year, then cancellation insurance makes sense. If there's a big expense, even if expenses exceed revenue, if there's a big expense exposure to your organization if the meeting is canceled, that's a good one. That is an organization that should consider event cancellation insurance. If you're in a place at a time where the exposure is heightened, if you're going to be in the Gulf Coast during hurricane season. If you're going to be in Chicago during the winter, or if you're going to be in California at any time, those are all factors. Those are known as hazards. A hazard is something that increases the likelihood and maybe even the severity of a claim. Those are all compelling factors that the more you check, the more likely it is you should be getting coverage for your client. You could check all those boxes and the client might say, no, it's just, I'm more risk tolerant than that. Or you might have a client who has very little of what I just mentioned, but they're very averse to risk. They say, yeah, I'll buy it. I think for an organization that's hosting a meeting that has any substance, event cancellation is an important consideration, whether it's a budgeted a revenue event or expenses exceed revenue. Event cancellation is an important piece of that portfolio. Interested in gaining insight on meeting insurance? My suggestion to you, John's so tough. John is always so tough. He expects you to read the policy, and you better show up having done your homework when you're with John. I'm a little more forgiving. I actually don't expect my clients to read their insurance policies. At least I approach it from that perspective. My expectation is that they know what they need to know from us when they make the decision to buy or not, and they know what their client or their organization's orientation toward risk is, so they can be informed of how to make that decision. And they know what they're buying when the time comes to buy. But if you forget all of that, come back, ask the broker. And that's what I'm suggesting here. I think you need to be a scholar at insurance when you make the decision to buy. And I don't even need to say it that way. You never need to be scholarly about your insurance. That's what you pay folks like me and John for.
One little anecdote there, if I may, Lou, is
yeah, sure.
Remember the Geek Squad? Still the Geek Squad's around?
Yeah.
And the founder of the Geek Squad was interviewed and said, well, how did you come up with this wonderful idea of going out and helping people with computers? He says, well, he said, the first thing I figured out is we'll do something the average consumer and user doesn't do. We're going to read the instruction manual. And,
yeah.
And I think that's sort of where you and I are too, is we're the guys who have read the instruction manual. And I think that's what makes it important to be able to have somebody work your way through to know what you can get, what you can't get. We're not going to gloss it over for you.
Yeah.
We'll sure make sure that what we tell you will give you a better idea of where you are.
And I'll just end with, sort of seconding what John said. I don't think your job as meeting planners is to know this product. I think your job as meeting planners is to go find somebody who knows this product. And if you're talking to your broker or you're talking to your lawyer, and they're not talking to you in the language that you use, if they're not really conversant in the meeting planning industry, they may not be the right person for this particular need that you have. If you ask a question and you don't understand the answer to that question, and you ask it again and you still don't understand, that's not your fault. And I would say your biggest hill to climb is finding an advisor who can guide your decision making rather than trying to take that burden on entirely yourself. And with that, I want to thank everybody. Once again, apologize for the disruption and wish you all the best. Stay safe.
Hey, Lou, we can go to 8 a.m. if you can do that. And I have several questions I've picked up on from the chat, if you're willing to answer those.
I'm happy to.
Sure. The first one is, will each carrier want to see the same thing, or do they have different checklists for this information? This was asked in connection with what the carrier will require to file a claim.
Yes. The inventory of documents necessary to support the claim is going to be basically the same regardless of the carrier. They all need the same information. Each will have their own particular way, their own menu for it, but all of them will provide that. When an adjuster is assigned, the adjuster will send out a letter that says, I'll need the following information. And you can just follow that, but you can expect it'll be the same, largely.
Great. The next question I will take, it is asking whether CE credits are going to be offered for the webinar. I will reach out to EIC later today to see if we can. Obviously, as a committee, where we don't have a provider license, but I will get an answer for all of you. The next question is, are lost profits from an event recoverable through a claim?
That's the expectation. Ultimately, the goal of the policy is to restore you to that position of net profit. And so that should be your expectation.
Okay, next question. I am interested in knowing if new clauses will be added to coverage and event contracts, and if we should start advocating for those.
I'm not sure I understand. New clauses? What was the question?
I am interested in knowing if new clauses will be added to coverage and event contracts. I guess this is more of a John question than for you.
Yeah, I think so.
So John, you're on the hot seat. If you want to defer that one until next Tuesday.
What we're going to see, Marianne, is going to be clauses which are limiting the liability and limiting the coverage, or making you, as an insured, go through a few more hoops to prove your claim. Overall, the insurance companies fear a lot is fraud in the representation of claims, which unfortunately takes place. But they're also very concerned about making sure that when they do pay a claim, that it does cover everything that is legally required under the insurance policy and the carrier agreement. I think we're going to see some issues relative to probably state insurance commissioners if it goes through a state commission for purposes of an approved policy, etc. So stay tuned. Yeah, there'll be new clauses. They're not going to necessarily work in the favor of the insured.
Okay, so there's another one, John, that tail tags on that prior question. I have one hotel willing to put in provisions if social distancing still is in place, and another who has ignored the question when I asked. Well, I'm not sure that's a question, but
I'm not sure either. But I think here's what we're looking at with a lot of meeting contracts now where the event has been postponed. There are two things that we're doing. We're reducing the room block and we're increasing the exhibit or meeting space just because of social distancing and the requirements that may be there. We have yesterday or today, the state of Indiana opened up to meeting groups of 25 or less. Well, that's going to be a difficult situation overall. I think we're going to see a lot of the interface between state and local regulation as to what the requirements are going to be. And who knows how long this is going to go on. We're seeing sort of the people's rebellion against the requirements to wear masks and from social distancing and the inability to get outside and go somewhere, et cetera, et cetera. We're in a lot of turmoil. We don't know the answers. And part of the problem, too, is it's going to vary depending upon where that program is going to be. Well, city, state, foreign country, and the like. And then if you're going to that location, does that location have a limitation on people it's going to admit to allow to come into that area without them having to be quarantined for, let's say, 14 days? I mean, there are places that say if you're coming into our state or you're coming into our town, you can do so, but we're going to require you to be quarantined for 14 days. Now, maybe as much as you might like the state of Texas, do you really want to go for a 2-day meeting and then be quarantined for 14?
okay, so next.
Can I ask a question of John here? Hey, John, the question I'm asked again and again, and I can only speak to it from the risk management perspective, but I think it would be worthwhile if you could speak to the question of legal liability to the planner, not necessarily to the individual, but to the sponsor organization, where they decide to host an event where the premises are available, there are no government restrictions, all the support services are in place, and someone contracts the disease, and it can be established that they got it at your meeting.
You put your finger on the major question is, did they contract it, and is there proof enough to show that by attending that program, that's how they got it? Maybe that instead of being at your program, they went outside, went to a bar somewhere away from your program, and maybe that's where they got it at the bar. I think the burden of proof is going to be pretty substantial. The other aspect of this is what the so-called duty of care. Right now, as you have seen, there is a battle going on in Congress as to liability limitations for employers who bring their people back. And if that person incurs a disease or contacts COVID-19 or whatever, can they sue the employer for forcing them to come back? There's other questions as to whether you can test people coming to your program for COVID or any other kind of communicable disease, et cetera, et cetera. So we got a lot of issues out there. Dolly bar the door, I know we're going to see one heck of a lot of lawsuits,
Yes.
regardless of what this is, which takes us to a whole other type of policy that people better have, their comprehensive general liability and the like, as to looking at what requirements are going to be there. Then you have where the employee situation, is it a workers' comp claim or does it fall under something else? I think that that's part of the whole thing, that lawyers are staying up at night trying to figure this out. You've got the plaintiff's bar, they'll be looking about how can we sue the defense bar, figuring out what the defenses are that we're going to be able to bring forward. But in order, the scenario that you gave, what is the duty of care that the person or the program sponsor has to maintain? And even let's say the town is wide open. Maybe the sponsor of the program says, well, I want to enforce social distancing. I want to make sure everybody has hand sanitizer. I want to do X, Y, and Z that goes beyond what the minimal duty of care might be. They probably have a pretty good defense. But notice I have said the word defense, which means they're going to incur legal costs relative to defending any claim that's going to come about.
Yeah, I can't wait till we can have that longer conversation in front of each other.
Yeah, me
Okay,
too, Lou.
we're right at 8 o'clock, but there's one more question and we've got 5 more, so I'll send them to you,
Sure.
and John. But there's one more I want to ask before we close. It's from Laura Lee Shapiro. If you have an approved claim, is there a deductible like home or car insurance? And I'm going to add to that, if you have other types of insurance, can they be called into play, like general liability, that sort of thing?
Okay, sure. So to the first question, as a general rule, there is not a deductible applicable to an event cancellation insurance claim. The payment is subject to adjustment, of course, but it's unlike other property claims where there's a deductible applied before the claim payment is made. If, Marianne, to your question, if there's other insurance that applies, the question needs to be, well, what kind of insurance is that? It's not likely that a event cancellation insurance loss and a claim for damages that would result in a general liability policy responding, those are pretty mutually exclusive. You could have a liability claim independent of the cancellation, but it's not a scenario where I can see one claim triggering both policies. There is a provision in the event cancellation policy that says if you've got other insurance that applies to this, it applies as a primary, and this is excess, but rarely will an organization have 2 sources of coverage for an event cancellation insurance loss. It's possible, and we've seen it a number of times, but as a general rule, no, that's not the case.
Okay, so John, I'm going to throw it back to you and give my personal thanks to Lou. I thought this was very valuable information.
Well, thank you all for attending, and I hope it was worthwhile. We will try to follow up with the remaining questions that did not get answered. We look forward to your participation in another program sponsored by the Independent Small Business Owners community as part of MPI, which, as I mentioned, would be on May 12th. Josh Grimes, an attorney out of Philadelphia, and myself will be discussing issues as to contracts limiting your liability and how you protect yourself in this particular environment. So everyone, stay well, stay out of trouble, and we hope to see you soon in a real live meeting, not virtual, but more importantly, stay well.
And before we do close, John, I do want to remind everyone on Monday, May 11th, Tracy Judge is also doing an HR session. And that's certainly not to take away from the one you and Josh are doing. The one you and Josh are doing, I want to make sure everybody knows and spreads the word that it is a town hall. So ask away all those questions you've been saving up as small business owners. They're going to be put their feet to the fire. So thank you all.
And we won't be at Lincoln Memorial either.
And let me also close by saying thank you so much to Happily and to Sarah for sponsoring the ISBO and for sponsoring these webinars. Sarah, we couldn't have done it without you.
Thank you very much.